Alrighty, so let's take another look at LC1 with a phase A trade. So in this instance, the 4-hour chart is actually bullish because when we had this last break of structure, there was no significant pullback in here. So it ended up giving us a very, very large swing range. And at the point in which we're looking at this trade example, we were coming into the strong 4-hour low. So usually that's when we start to think about obviously trying to get long if this bullish trend is going to continue and we're not really too keen on shorts. But in this specific scenario, because we have such a large swing range, this is where we can actually place a lot more weight on the more recent price action. And we can see, if we just look at the internal price action, how clearly bearish that is, how well it's respected. We did have a sweep of the highs there, so we didn't get a bullish boss. Another break to the downside, another pullback, and another break. So literally for like since the 18th of July to August, nearly a month, we've just been heavily bearish. So yes, we do have to be aware there's a strong 4-hour low here, but this is where we can just, especially if we're trading, M15 ideas with M5 entries, we can weigh far more importance on the more recent price action and continue to follow that bearish order flow. As we can see, supply is just clearly in control, right? So if we jump down to the M15, it's even clearer. Just zoom out a little bit so you can see the recent swing structure, right? Where we got this break of structure to the downside, we got a pullback, another break of structure to the downside, all right? We pull back into pretty much the extreme supply within here, and then we got another bearish boss. So we can see the clear bearish trend overall. Now, I played price action to just before the London session open, which is obviously, we include Frankfurt open with that for us, just before 7 a.m. UK time. So this is literally how my charts would look if I got to my desk, just before I'm about to trade the session. This is my thought process of how I line up a trade idea. So we know the 4-hour internal structure is bearish, so we're going to keep with that bearish bias. The M15 swing structure is also bearish, right? So that's going to be our directional bias for the session. Okay, we've pulled up to the premium of the swing range. So there's increasing probability now that the swing pullback is over. Yes, we haven't quite mitigated the extreme level of supply, but we know that we don't have to. We have taken some significant liquidity to the left here on the M15, which is just another sign that the pullback may be over. Okay, and then since then, it's not the largest of internal structure, but you can start to see that bearish order flow really starting to kick in since we've liquidated that lid to the left. Okay, so when this sort of happens, this is when you can just follow that immediate order flow to look to get involved. Right, so I'm drawing the supply just on this buy to sell here, but it may as well include the wick, okay, in case we push up a little bit higher. All right, so this is exactly how I saw my charts. If you look back on, so this date is the 18th of August. If you look in the old analysis in Discord, you'll see this is exactly how I had my pre-session analysis before this session. And this is where I'm now looking, completely focused on shorts to trade from this POI to look for price to target this low. Now, yes, there is some demand here that led to a break of these highs, but when you see price action that forms like this, pretty much just a straight leg. That's kind of just a pause in price action. It's not like you got like a significant pullback that then does that and sweeps liquidity and flips supply, right? This is kind of just Asian session low volume trickling up, kind of ascending highs like this. When you see that, this is not the type of POI to be too concerned about. Generally, this is low resistance liquidity, stacking liquidity there that typically will get taken when that pullback objective is likely complete, which is what we have here. Okay, so in simple terms, we pulled back during Asia, taking liquidity, and it's now looking like we're going to get the continuation of this movement here to the downside, right? So if we're taking shorts, this is what I would classify as phase A, because again, it's pro-swing, pro-internal. I know it's not the most significant of internal structure, but it's what we have to work with, okay? And it makes sense from where we're coming off. So if we look at the diagram, this is basically like a trade like here. Nice tight price action. We think the pullback is over. It's go time to follow the low. And this is essentially the internal range I'm talking about. You see how tight and small this is? So this is why I'm thinking about we can potentially use some lid here to the left, rather than like something like this, where let's say there was like an M15 high here, and then prices coming all the way over here, right? And then we're going, right, can we use this lid into here? Maybe you can do that, but that's not the type of high probable scenarios I'm talking about to think about it. This is a tight range, immediate price action, right? We're just looking for price to go. So if we jump down to the M5, obviously, we'll still be looking for the LC2A method to occur. So for that, what would I want to see? I would want to see a high that breaks a low, right? That's then a strong high that caused an M5 chock. Then we would look for the liquidation of the high. As long as the POI is respected, that would be the entry, right? But this, because like I said, all the confluence, we can look for LC2A. Now, what constitutes as valid lid? All of these highs here, I'll draw them on for you. All right, that was a little bit higher as well, would have all been valid levels of lid. Any structural high you see that has not yet been liquidated, right? These are all potential highs. But let me just keep it simple for you. What do we need to wait for first? We need to wait for our POI mitigation. So let me play this forward, a few candles. Now we get our POI mitigation, okay? So now just take the nearest level. You don't have to draw all of these on and go, right, here's that nearest level that's been liquidated. This is our freshest level of strong liquidity. We know there's gonna be liquidity behind the structural high. That has now been taken, okay? Here is the PBL that liquidated that M5 lid, okay? So we now know this is still relevant for us. Let me just make this into a liquidity line. Because the PBL is still active, right? The PBL has not been mitigated and made a higher high. So this means we can look to get involved, okay? That's the mechanical rule we use to determine if this liquidity is still relevant to trade from here, right? Because let's just say the POI was a little bit, just say it's higher, right? If you can imagine it was higher. Now imagine if we liquidate this lid here, price then pulled back, mitigated this PBL, right, the point before the liquidation, and then price pushed up higher and made a clear higher high with a candle body closure above that high. And then we got our POI mitigation and we were up here and we were asking, okay, is this lid relevant? Well, no, because the PBL held and made a higher high, right? So that's when you wouldn't take the trade for this lid. But in this instance, we've got the liquidation here, the PBL is still active, therefore we can look to get involved on this trade, of course, if everything else lines up, right? If you can get suitable risk reward and all of that good jazz. So 2 pips stop loss above gives me nice protection above the high as well. And then if we look for 3.3, ideally we can get it within the range. Okay, just about there to the low. And that's the idea, okay? So again, phase A trade, we have to let it play out a little bit. But yeah, it's more about like the tight range. Phase A is obviously generally always going to be high probability. So even if you don't get the most perfect of tight ranges, at least you're trading pro swing, pro internal structure. You're going to be on the right side of the market far more often than not. But this is what I mean, like the extreme small high of that internal range, it's the extreme POI. It's just super clear. Now, does this type of price action happen every day? No, but when it does, that's what I'm saying. This is when you have to recognize, right, this is go time now, foot on the gas. I'm almost looking for an excuse to get involved. This is when I'm going to do it, right? Rather than when you've got, big ranges and there's kind of highs everywhere and you're not sure which POI, like that's not the time to be just trading, any of these like sweeps all here to the left. It's when you've got this really clear, immediate price action, immediate order flow, like one POI to choose from, nice tight price action. Like that's really kind of what you want to see when you're thinking about LC1.